Hello again, fellow BeachBum traders. Welcome to part 2 of our weekly trading game plan for the week of July 11th through July 15th, where we'll update our watch list, our various watch lists for the week of July 11th through July 15th. We'll review some of the trades that we've made for this week, and then we'll talk about any other additional strategies that we want to employ for your success in trading for the week of July 18th through July 15th. If you have not already seen part 1 of our weekly trading game plan titled Trading in the Eye of the Storm, we would highly recommend that you view that, as that has the market analysis, our strategies, etc. For the inputs to our updates to our watch list that we're using in part 2. So again, we'd highly recommend that you view that. You can find a link in the description box below. There's also a link in the notes for this weekly trading game plan, which you can find a link to the Google Drive, where these notes for this weekly trading game plan and many of our previous ones are stored. And again, you can find a link to part 1 also in that Google document in that Google Drive. So let's get started with part 2 and talk about what we're going to be watching to trade for the week of July 11th through July 15th. Okay, first we'll review some of our trades from the previous week, and we'll just talk about them first, and then we'll jump over to a new watch list I have in Webull so we can look at the actual charts. So the first one is we went long big lots again on July 6th. You can see at 2051, this is a swing trade we've been talking about for a while. Discount retailers we like. Big lots was down at a support after they had inventory issues. They fired their director of merchandising. A potential catalyst coming up is them hiring a new director of merchandising. That could be a positive catalyst for big lots. It swung up nicely, as we'll see, and so we are protecting our profits, managing that swing trade as it swings up. The next 3 are all uranium plays, and in last week's weekly trading game plan, you'll hear our thesis on uranium. Also in part 1, we talked more about that we're still bullish on uranium, although it's currently trading with the energy sector. It's tending to trade with the energy sector. But we went long 3 different uranium stocks that we had on our watch list from last week, because we saw a drop in oil and natural gas prices. It drove all the energy stocks down. My thesis was that, again, these uranium stocks are being dragged down by that push down in the energy sector, even though they're not directly related to the oil and gas issues, with Russia and Ukraine. So I expected a bounce in these guys. So on the 6th, I bought all 3 of these uranium stocks. DNN, which is a smaller, lower cost uranium play. UROY, which is a royalty, uranium royalty out of Canada. And UUUU, which is another old favorite we've swung uranium with a number of times in the past, Energy Fuels. So all of those 3 we bought on the 6th, and all 3 bounced up nicely on Friday, as we'll see in the charts. So if you want to get real-time trade alerts like this when we make these trades, you can join our Patreon. We try to send messages out to our Patreon members as soon as possible when we make these trades, and then we also post them in the alerts channel in our Discord, which our Patreon members also have access to. And if it's a price alert that came out of Thinkorswim, it will be in the TOS alerts channel, a reply to that Thinkorswim alert, and or if it was just a regular trade that we made based on our analysis of the charts, etc., then it will be posted in the alerts channel. And you can find an invite to our Discord in the description box below, also in the links section on our home page. And again, if it's a reply to a price alert, it'll will reply in the Thinkorswim TOS alerts channel. As you can see, several of these were alerted. And then if it was just a regular trade, we'll put it in the trade alerts channel. So, and also those will get posted as we post out those messages from Patreon and other social media like Twitter, which subsequently we will share out as well. So you can get real-time alerts to our trades as we execute them via those channels. So we hope that helps. Okay, just to further review, how we made these trades, why we made these trades when we did. I've created a new watch list in Webull. I'm on the stock screen in the online version of Webull. And again, I created a new watch list just to put the stocks that we made trades so we can review them. So we're looking at big lots. We can see, okay, on the 6th, we bought big lots somewhere around 2051. You could see they were running it up pre-market. I could see it looked like it was going to run up a little bit. So it had positive momentum at that time. There was a little bit of downward pressure in the market. When it turned back up, again, when broke VWAP, broke this support line, we went long on big lots, and you can see it subsequently run up the past couple days. Again, I'm protecting my profits by manually moving my stops up. So right now I've got a stop right below that resistance line. As it crosses subsequent resistance lines, I will again move that stop up manually to protect my profits in big lots, and hopefully it will continue to run. Good thesis, we think so. Then the various uranium plays, again DNN. You can see it bounced off. It kind of oscillated around the support line, bounced up, broke the VWAP. We went long, and then it subsequently ran up nicely on Thursday and a little bit on Friday. Friday was a little flat, but we had a nice run up in the uranium stocks on Thursday. So UROY, and again, that was my thesis because of the exaggerated move to the downside of oil and natural gas. On Tuesday, I thought that we'd get a bounce on Wednesday, which we did. It pushed uranium up with them, so that was good. Here's UROY, and again, we probably bought a little bit high when it started to pop up, but it dipped, and then again on Thursday it made this run up, and again we're manually moving our stops up as it breaks these various resistance levels. Same thing with UUUU. You see it dipped a little bit below where we bought it, but then it recovered nicely. Had a big jump on Thursday, and then again we're manually moving these stops up as it breaks subsequent resistance levels. So again, protecting our profits. Again, in response to Spacula's question in part 1, we're being a little bit defensive on these because they are moving with other energy stocks, which have been kind of whiplashing back and forth. Even though their uranium's a little different, it's clean energy, nuclear power, doesn't suffer from the same issues, the Russia-Ukraine war issues, but they seem to be moving together right now. So if we get a down thrust, we'll take our profits, and then we'll buy back again and swing them again at a support level or a bottom. So I hope that helps. If you have any questions, please let us know in the comments below, Discord, social media, etc. Right now, for Webull's 4th birthday anniversary, they're offering 6 free stocks when you open and fund a new account. Typically, they offer 2 or more free stocks when you open and fund an account in Webull. But again, for their birthday, their 4th anniversary birthday, Webull's offering 6 free stocks when you open and fund an account. And you can see you get 2 free stocks valued up to $300 when you open the account, Deposit any amount and you get 4 free stocks, each valued up to $3,000. So now would be a great time to open your Webull account if you're not already a Webull user. Webull is our primary trading platform that we do the majority of trading in our accounts. So again, great opportunity. Don't know how long this will last. Again, Webull typically offers 2 or more free stocks, but right now for their 4th birthday, you can get 6 free stocks if you open and fund an account now with Webull. So we hope that all helps. You'll find our affiliate link for Webull in the description box below, at the top of our BeachBum Trading YouTube page in the little link section, also in the bottom of the About page of our YouTube channel, and also in the trading platform section of our BeachBum Trading bumwithouttheu.com website. So we hope this all helps. Get your 6 free stocks now while you can for Webull's 4th birthday. Okay, let's talk about our updates to our real-time main watch list for this week. And again, I thought it was going to be kind of a slow week, being a holiday and being summer, but it ended up being a very active week, which just goes to show you always want to be prepared and react based on the market conditions. So again, you saw we already went long on big lots. We looked at that. We still have Budweiser on our watch list. We went long on DNN. So again, there's opportunities. The uranium guys, all of those big lots, the uranium guys have already run up again. I wouldn't chase them. But we might get a dip, and there may be opportunities for you if you didn't already catch those trades to get in. We talked about Mark Forged in the past. It was in our bullpen. We'll take a look at the chart. You'll see why we moved it up from our bullpen into our main watch list on the 7th. MP Materials. This is a rare earth play. We've been watching these guys. It's been in our database for a long time. I wanted to buy it. It's been volatile over time. The thesis is this is a US-based rare earth materials mining company. I think they're based in California and Nevada. And as we'll see, we'll look at the chart in a minute. It finally came to a support level that looks attractive, so we put that in our watch list on the 6th. And maybe I should do a due diligence video again explaining who MP Materials is and why it is advantageous. They also have some defense contracts to support US-based rare earth materials. One I recently added last night, looking at our queries in our database, and just for your information, I captured my after hours processes, my routine that I go through to find these stocks to add to our watch list in an upcoming video, so keep your eyes out for that. But this is one that popped up in one of my database queries, is trading below cash, and so we're going to add that to our watch list, and we'll look at the chart in a minute. It's Pitney Bowes. It's an old company, again, business equipment, and maybe I should do a due diligence video on them as well. SOXL is the long on semiconductors, and we've talked about that for a couple weeks, that we think that commodity cycle may be turning. When SOXL bottoms, looks like maybe we're hitting a support level, so we put it in the game, moved it up from our bullpen on the 6th. UROY and UUU, again, we're already long. There's the uranium plays, so we've already discussed those. VTI, again, we have standing good to cancel orders out at this most recent 52-week low, just waiting for a dip. Again, if you watch part 1, there's no reason to believe that we're out of the bear market yet. We don't have capitulation, etc. So if we get a dip in the markets, that VTI hits that low again, we're going to take a very large position in VTI. And you can see our thesis going back for some period of time. So now let's look at those charts in Webull. If I look at my main watch list, Again, we'll just quickly scroll through what's in there. We see Bud. It's run up a little bit. You know, I may end up removing it if it doesn't come back down, but we'll see. Mark Forged. Again, you can see it looks like it achieved a stable bottom down here. It's making higher lows. Hopefully it hasn't run away. If we get an opportunity, again, this is a 3D printer, profitable. We like them. So if we get an opportunity, here's the MP Materials. And again, you can see it looks like it held this support at 29-ish. And it may come down to the support, touch again. In that case, we would be interested in a position in Mark Forge. I think our target price here is 28.85. You can see that's the 52-week low, and you can see it's kind of bouncing off of that support level there. So again, we like the thesis behind them. See, it's got a decent range. It could get a double out of it. So we like Mark Forged. Pitney Bowes, again, you can see it's been in pretty steady decline, but if we look at it more recently, we can see it looks like it may have achieved a support and may be bouncing back up. So one of the negatives about Pitney Bowes is their high debt. It's a profitable company, old company, but it does have high debt, and I may have to do some further due diligence to see how sensitive that is to the rising interest rates. SOXL is the long on semiconductors. You can see it's kind of run away a little bit, but it has been volatile recently. So if we get a little bit of a dip in SOXL, we'd like to go long. Again, semiconductors are very cyclical. We were playing SOXS, which is the short on semiconductors for a while when there was that shortage. Again, now, you know, it's come all the way back down, and now the various semiconductors are reporting demand issues, supply issues, etc. And it got a little bit of a bounce, but if we get a dip, we'd like to go long semiconductors. Again, this is a longer term swing. The cycles on semiconductors is relatively long, so you have to be patient. It is volatile as they're sensitive to various different semiconductor companies and sensitive to technology. So sentiment and technology will also move semiconductors and vice versa. So VTI, you can see there's the bottom, recent bottom that we're looking for. We just need a capitulation. We'll catch that, and then we'll hold on to it for a long-term swing or investment. And then our, our favorite Chinese swing on any given day, yang or yen can be a potential scalp, swing, day trade, you name it. We're hearing again, China's locking down, they're requiring vaccines, etc. There's all kinds of issues that could drive Chinese stocks down. So this is a constant where we're just looking for it to hit that bottom again, and we'd go long on yang. I prefer shorting China stocks versus longing, just because all the political issues. So that's pretty much, there's a number of these that you could scalp, day trade on almost continuous basis. Volatility is another one, although it's kind of sitting in a mid-20 range, so there's not a real great play, real obvious play from a swing standpoint right now in volatility. Just a quick reminder that if you would like to get notified of any updates to our watch list that we make intra-week, up to daily, we post those into our Patreon, which is patreon.com BeachBum Trading. You'll get notified automatically via email and or in the stock watch list under the watch list category in our Discord. Again, we will post any updates to our watch list intra-week, up to daily, to our Patreons, and also in the stock watch list channel in our Discord. So again, if you would like to get automatically notified of any intra-week updates to any of our watch lists, These are the various ways that you could do so, and we hope this all helps. Okay, now let's look at updates to our bullpen stocks watch list. And if you happen to be new to our BeachBum trading community or BeachBum trading YouTube channel, concept of a bullpen are stocks that we're not watching real time during the day, but we revisit them typically at the end of the day, see if the setup looks attractive. If so, we'll move them up, put them in the game, move them up to our real-time watch list. If not, if they've broken down and run away, then we take them out of the bullpen. So again, it's a secondary list. We're not watching real time. Maybe once a day we'll revisit, and here's the ones that we currently have in our bullpen. BDRY is a dry bulk shipping ETF we've been watching for a while, and in a second we'll look at the charts of each of these in Webull. We've had CLIX, which is an online versus brick and mortar retail long short ETF we've been watching. A new one we're adding this week is EURL, and if you watched part 1 already, you'll see that the European stock market really took a dump, and that looked like an opportunity, so I searched for and asked around for ETFs to long the European stock market, and the one I found is a leverage 3x on the FTSE Europe, and it's EURL, and you'll see it got a quick bounce at the end of the week, so I kind of missed that bounce, but this is an opportunity to long Europe, and obviously Europe's had a number of issues. It may trail, the U.S., etc., but it's a good one to know to possibly play the European market. We've had Ford on there for a while, waiting for a good risk-reward profile. Another one we're adding is FONR, and we added that to the bullpen on the 7th. And this is a medical device company. They're profitable. I think it's like MRIs. I'd have to look at the profile again. We've had them in our database for quite a while. They happen to pop up as potentially attractive, so we're going to add that to the bullpen. Keep an eye on them for benefits where the healthcare sector is making a positive run. We talked about mark boards. We moved up to the real-time watch list. Another one is RETL, which is a retail bull 3x, and generally one would think retail in general, the sentiment's pretty negative, but this guy might be bottoming. We also talked about part 1 that people are starting to shop already for back to school and the holidays due to increasing inflation and supply chain issues, so retailers might not do as poorly as people are expecting. So if we see a turn in this guy going into the holidays particularly, that may be an opportunity. So we're going to keep an eye on that. SOXL we talked about, we moved it up to our main watch list. Now we think the semiconductor cycle is turning, so we want to go long semiconductors now. And then URNM is another uranium play, but it's been running higher. It's a more popular one, and so we're just keeping an eye on it to see if it'll come back down. If it comes back down, maybe we'll also go long on URNM as a uranium play. So now we'll talk about our ETFs, etc. So if we quickly whip through our bullpen stocks and the stock screen in Webull, so here's my bullpen watch list. So we look at BDRY. We see it's oscillating. It potentially attractive. I just want to see it hold that support level. And CLIX, again, that's the long online short brick and mortar retail. It's kind of up a bit. Wait for it to come down. Here's that European ETF, and you can see I kind of missed that bottom, and it popped up the past couple days, but if we can get another little bit of dip where it holds that support, that looks attractive. Forward, we'd like it cheaper. You can see we'd like it around 10. Here's that FONR that we're adding. You can see it looks like it had a bottom, possibly a capitulation bottom, and then a couple spikes up. It's a little bit of a low float. Looks like it might be trending up. We'll keep an eye on that. If it holds the support level, it's been downtrending for some period of time, as most of the healthcare has been. But this looks potentially attractive. Here's that retail bull guy. Again, you can see it looks like it may have bounced off a support level, maybe trending back up. So there's made lower lows, Now it's making higher highs, higher lows. So that may be an interesting swing again, definitely going into the holidays. Here's URNM, the other uranium play. Again, we would like it down a little bit cheaper to get us a better risk-reward profile. And then we've talked about Yang and Yen. We'll constantly watch those guys for opportunities. So hope that helped. Okay, now let's talk about some updates to our ETFs. Firstly, I've decided to move the treasury-related ETFs out of the bullpen that we've had in there to a new bonds watch list in Webull. That way I can just watch all the bonds-related ETFs in a separate watch list in Webull. Again, we saw in part one the bonds have been kind of crazy volatile, but eventually there's going to be some opportunities. It's just a matter of identifying the opportunity and the risk-reward profile that we'd like. So the next thing is I want to thank Easy Mike, who's a member of one of the Benzinga Show live chats, who recommended this ETF ECH, as it's a Chilean ETF, and Chile has a lot of lithium. So we've added that to our database. You can see here's ECH and FinViz. You can see it's kind of near bottom. Here's the lower support level. It's potentially interesting. The short-term risk-reward isn't that great, but we have added it to our database, our ETF comparison spreadsheet, to keep an eye on that, as that may have some opportunities going forward. So, and again, this ETF comparison spreadsheet, Google Sheet, which is available to our Patreon members now, is still very much under construction. But we have made it available to our Patreon members, becoming a much more, I'm relying on this more and more as part of my after-hours process to identify potential opportunities. And as we identify new ETFs, we add them to this Google Sheets, and you can see the various risk-reward profiles. Anything greater than 2 is highlighted in green, as that's my standard criteria for identifying an opportunity for a risk reward. So again, I'm starting to go through this on a daily basis to see if there are attractive ETFs that we can play for risk reward, and then matching it up with our thesis, our strategy from like our part one, so we can see some of the agricultural guys are starting to become attractive. DBA is an agricultural one. Might want to take a look at. Coal, we know, boil, etc. That's swings on natural gas, drip, drip and gush, UCO and SCO, again, how to play oil. And again, this is very helpful if you want to use ETFs to scalp, day trade various commodities. We have a lot of the ETFs to long short the various commodities, the indices, the trends. Here's CLIX and retail, so we see where this risk reward on retail is attractive. And again, this is now using these Google functions, so it's not real time. It's got a 20-minute delay, but again, for an after-hours process to identify potential ETFs to add to our watch list, it's pretty useful. So again, we hope that all helps. Again, you can see here's the VIX of the UVXY, so it's saying long versus short is more attractive at this point in time. So again, that it's very much under construction. I'm still working on it. I have a executable now that can read Google Sheets. Doing that in another portion. You'll see that in my after hours process video, and my next step when I get time and I'm just swamped. So again, anybody willing and able to help in those regards is most appreciated, but my next step is to try to figure out how to automatically